Hello everyone and welcome back to a brand new video on the Online Bread channel where I share my sort of financial journey here in the UK. So with those that are wondering, I used to make videos a couple of years ago on this channel pretty frequently showing you my stocks and shares portfolio. I am now 23 years old. I think I was 21 when I posted my first video on here. And I had just under 100 grand pounds, so over $100,000 invested in the stock market, primarily in ETFs through an ISA and a Sipp. In today's video, I am going to show you an update on my portfolio. You may be surprised it's a lot less than what it used to be. And the reason for that, and the reason I haven't really made many videos, is because I wasn't investing in the stock market for a while. Essentially, I've got, if you've watched a couple of my videos and you're returning, one, thank you. I appreciate being here. I hope you're all doing well. But secondly, I started a new business, kind of an investment outside of the stock market in the real world, with real world assets. And no, it's not real estate, but I was investing in assets which needed a pretty substantial, I would say, startup cost. Now, I made a decent amount of returns on my stock portfolio, my ISA. So I thought I'd take the money from there and use those gains to fund this new sort of investment, which cash flows me just around 2,000, 2.5 grand a month. And I invested around 70,000 into it. So it was pretty worth it. It makes, about 4%, 5% a month return. So that was worth it. But yeah, so I'm going to show you my stock portfolio now. I'm sort of investing back into stocks again. So let's show you how things are looking. So we start off trading 212, which is where I used to have the majority of my funds. I now only have £15,000 in here, £15,500, which is actually in cash. You can see my kind of return. They've updated the app recently. I don't like it. And you can see this is making about 60 pounds a month. Again, I'm not doing anything with this. I'm kind of treating this as an emergency fund for now, because I'm actually investing outside of trading 212. So this is just sat here in the savings. It's making 5% a year, or 4.9, I think it is. But you can see how much I started to withdraw from this. I had around 70 grand in here at one point. And you can see I started slowly taking money from this, because, I was just kind of taking out the returns that I made, which were a lot higher, by the way. It ended up being way over, sort of 15, 20 grand in returns from the stock market. But I essentially took most of the money out of here to fund this new business that I have. So I still got 15 grand in here, which I'm kind of just letting sit there. Obviously, it's a lot less than 64, but it's kind of sitting there whilst I'm, deciding on what to do. So that's the first account, £15,500 in my stocks and shares ISA. You can see I withdrew about 50,000 from it. The other 20 grand I used from my own pocket, but around 50,000 I took out in the previous tax year. That's why it says I can put in another 50 grand, or £49,927, because this is a flexible ISA. So this is the first account, only 15.5 grand in here, but it's making around 60 quid a month, which it's okay. It's an emergency fund earning 60 quid a month. I'll take it. It's earned around £200 in 3 months, which again, I would take it for just 15 grand sitting there. Okay, the next one is Vanguard. Now, I used to have my SIP my pension, my self-invested personal pension, which is what SIP stands for. I used to have this over on Free Trade. I moved it over to Vanguard because I just wanted my sort of retirement account in a more, long-term, sort of more history investment broker. So I went over to Vanguard. So I just have 3 funds in here. I have a target retirement fund, which is at 22%. I do want to do some rebalancing into this, because I don't necessarily want 22% of my portfolio in a accumulation target retirement fund. The target retirement funds are fine. You can see this is up by £150. But I don't necessarily want too much of this weighted in the target retirement fund. What happens if I click detail view? Okay, it doesn't really matter too much on that. The next one is a FTSE All World fund, which I do want to switch these to accumulation because these are currently distributing dividends and I'd like it to reinvest. So anyway, we have 36% weighted towards a FTSE All World fund, VWRL, which currently has, I put in £2,100. This current value is 2,400 and a profit of 327. And then we have the common VUSA, which is an S&P 500 fund, which is currently 40% weighted, 2.2k cost basis, value is 2.7, up £487. And then we just have £87 here in cash, which I could invest. It's kind of just sitting there right now, which is currently I have contributed £5,800 and it's currently worth £6,761.78, which is a total gain of £961. So if we go over to performance here, you can see the graph. Don't pay too much attention to this. This is my personal rate of return of what I've contributed and whatnot. So you can see here, this is the graph. Last year we had 170, and then I started to build it up, and then my transfer came through, I believe, around here. And then, yeah, it's kind of just been building ever since. I think the highest we got this to was around, 6.9k, almost 7,000. And then, yeah, you can see here some of the cash that we've had, or some of the things that we've had going on here. So you can see cash paid in is 4,964. Don't worry about this cash withdrawn. I think this was maybe a bounce direct debit from the bank account that I used to fund this. It's not my main one, so obviously it just kind of bounced there. And then transfers 851. Total 5.6. Your investments returned, gross investment value 961. Investments sold. I did sell off a fund here. I'm not too sure how this is calculated because I did have a dividend ETF in there, which I kind of just sold and then put back into the S&P. So this may be what was left over. I'm not sure. Gross interest on cash was £8.26p. Dividends £87. So that explains where this cash comes from, I guess. Yeah, dividends is, where was that? Insight. Oh, where did that go? Performance, calculations. Here it was. And yeah, dividends 87, tax 0, charges £4. I am aware of the new fees that are coming on board to Vanguard, and I'm okay with them. I don't mind the fees, to be honest, because I know it affects people under 30k. I plan on getting this over 30k very soon, so I'm okay with the fees, to be honest, for now. Could move it to somewhere like Train 212, Invest Engine, Hargreaves, Lansdowne, that kind of thing, but I'm happy it's sitting here for now. And I think that's probably it, to be honest. These are the yeah, this is the income and stuff like that. You can see the investments, unrealized gains and losses. You can see dividends and that kind of thing, I guess. And of course, we have the graph there. So this is the pension. Okay, I don't have any plans to contribute more to this at the second because, again, that new business is cash flowing me 2.5k a month roughly. Is, I'm looking at reinvesting that money back into it. But I can really only reinvest back into it when I have about 10 grand or so. That's every 5 months or so. So I'm looking at reinvesting back into that to get that up to 5, 6, 7, 8 grand a month. And then I can plow more money into the pension, more money into the ISA, that kind of thing. I do have other businesses. I have a marketing company. I have other investments in other assets that generate me cash flow. But this is specifically talking about my stocks portfolio, which I can do videos on my other businesses and other cash flow portfolios if you want me to. But for now, we will stick to the stock stuff. So yeah, 7.7k in the pension. And then if we go over to, you can see I have contributed £1,190 this tax year. And tax relief, which is obviously the bonus. I believe the government give you 20%, I think it is. So that's another £300 almost. So contributions £1,500 in the past tax year. And then if we go to my ISA, which is a very, very new account. I only started this literally last month in December. So you can see we currently have FTSE All World here, accumulating fund. The current value is down 50p. But again, this has been like 2 weeks that this has been a thing. if I go to performance here and go to, if I go down to calculations, you can see here, haven't been charged anything. Um, Gross interest on the cash was 24p. I got 18p in dividends. Yeah, that's it, I think. So yeah, literally, I have a standing order set up for £170 a month, which just goes into here. I don't look at it. It is putting straight into this. We get one share of this every month, and the rest just goes to cash. And then, of course, we can invest this cash back into different things. But yeah, pretty cool stuff here. I think if we go to, sorry, I'm quite new to Vanguard, so I don't necessarily know how to look at um, I don't really know how to look at things as simple as trading 2-on-2, for example. But you can see the insight of the All World Fund is 43% of it is weighted to North America, 7% Europe, 2% UK. And you can see how that is weighted. Now, I do actually, the reason, if we go back to my pension, I was going to mention this here. The reason I have both the All World and the S&P is because I want the majority. I am pretty bullish on America. I wasn't, but I am now since recent elections. Of course, everyone has their own sort of opinions on that. It is what it is. Everyone has their own opinions. You can have your own opinion, whatever. But I'm pretty bullish now. So I do want the majority of my portfolio weighted to America, because if America falls, the rest of the world is kind of falling with it. And also, I do think Asia is pretty good to have exposure to. That's why I have both. I'm not bullish on the UK. I'm from the UK, but I'm not bullish on the UK whatsoever. So, but unfortunately, it is in the All World Fund, so we kind of have to have it there. So that's why I have both of these, the FTSE World and the S&P 500, and then I picked the 2055 fund because that's when I can access my pension, I believe, or it may be a couple years later now, but yeah, that's why I picked this fund here. So yeah, I just wanted to mention that as well. And then we have a third account, which is extremely small, and I just did a test deposit, which is Invest Engine. Literally £100 in the other day, I think 2 days ago or something, which is the Vanguard S&P 500 again. We've made a whopping 86 pence over the past 2 days. So take that as you will. But yeah, that's literally just in VUAG, which is Vanguard accumulation. And that is why I showed you this, is because, again, we just literally put this in a couple days ago. This is my Invest Engine portfolio. So for the plan for this year, going forward, obviously we're coming up to the next financial year in a couple of months, so a new financial year will start. I'm not too sure what I'm going to do with this 15 grand yet. I don't know whether I'm going to invest that back into stocks, keep it there as an emergency fund or what. But I'm either going to start investing this again back into the stock market, leave maybe 10 grand here as an emergency fund, for example, which will last a few months. My expenses are pretty low, to be honest. So this 10 grand would probably last a good few months. And then, yeah, Vanguard, again, the majority of my ISA investments are going into Vanguard. And then this Invest Engine is just a small portfolio that will start to build up. Now, I do need to keep an eye on the contributions because, of course, we can only have 20 grand across all different ISAs. Now, they did make a change, I think, where you can have as many ISAs as you want, as long as you don't contribute more than 20 grand combined. So if I have two ISAs that I'm contributing towards, as long as I don't invest 10 grand, 20 grand between these. So for example, I could do 10 and 10, 15 and 5, 19 and 1, for etc. As long as the combined amount doesn't cross 20k, then we're okay. But yeah, that is what I am doing with my investments. We have, what's that then? Let's have a look to see how much the total amount is. 7,000 plus 15.5, that's 22 plus 100. So yeah, like 22k, something like that. 23,000, which again isn't much, but I did take a substantial amount out to fund another investment, which is actually cash flowing me instead of just gaining gaining value from the price moving up and down. So anyway, thank you for watching. Hope you enjoyed. Apologies for the long sort of long absence, but I will be back with more videos. Let me know down below what you want to see on the channel, the Online Bread channel. If you want me to provide more insights into what I'm investing in, or yeah, just what I'm doing in general. I could talk to about other business stuff, other methods of earning money through other investments. Let me know. But thank you for watching. Hope you enjoyed. Let me know what you think, and if you could subscribe, that would be massively beneficial and helpful for the YouTube algorithm. So thank you, and I'll see you next time. Goodbye.